How national insurance is calculated. Explained simply. National insurance is not taken from every pound you earn. It is calculated only on the portion of your earnings that falls above a certain threshold. Understanding how it is worked out helps you make sense of your payslip. For 2025 to 2026, national insurance starts on earnings above £12,570 a year. This is called the primary threshold. Earnings below this amount are completely free of national insurance. On earnings between £12,570 and £50,270, you pay 8%. On earnings above £50,270, the rate drops to 2%. The first £12,570 is always free of national insurance. Most employees are paid monthly, so the thresholds are divided across the year. The monthly primary threshold is £1,048. National insurance is calculated on your gross pay each month above this figure, which is why your NI can change if your pay changes. Here is a worked example. If you earn £30,000 a year, subtract the threshold. 30,000 minus 12,570 equals £17,430. Apply 8%, £1,394.40 a year, or £116.20 a month. If you earn more than £50,270, the calculation works in two parts. 8% on earnings between the threshold and £50,270, then just 2% on anything above that. This is useful when you want to check your national insurance figure on your payslip, when your pay changes, and you want to understand why your national insurance has moved, or when you are comparing job offers and want to estimate your deductions. A common mistake is thinking national insurance is a flat percentage of your whole salary. It is not. Like income tax, it only applies to earnings above the threshold, and the rate changes at higher income levels. To recap, national insurance is calculated on earnings above £12,570. 8% up to £50,270, then 2% above that, worked out on your gross pay each pay period. Thank you for watching. Subscribe for more everyday money explained simply.